Welcome to Mustafa Belkiyat's Belkiyat.com. We're doing analytic studies where we put charts up with horizontal, vertical, diagonal lines and markups. Sometimes it'd be very confusing. So please pause and review. We're open to questions, suggestions, and constructive comments. As you see from the email below, feel free to write and give us your opinion. Today we're doing at GC on the COMEX Gold from February 15, 2014. In front of you is a daily chart that goes back a year. We're going to be using the professional technical tools Belkiyat.river, and so let's get started. As a continuation, we did a previous video on February 4th, 2014, where we showed technically that an upside move is in the works. The price at that time was at $12.60. Several of the reasons that we said is that gold went through a double bottom happening in July 28th and at 31st of December of 2013. That is a very strong support that we didn't believe that gold could go down much further. From a fundamental standpoint, the price of gold to be manufactured was being tested itself. Gold was going through a rising wedge. It was getting very close to the 200-day moving average, and on other charts we showed the volume was starting to rise also. So let's see what happened in the past several weeks. As of Friday, gold was $13.19, which from $12.60 is a 4.68% increase in 10 days. As you can see here, it's still riding up on an upward trend. Of course, the double bottom giving it strength. And the next chart we're going to go and we'll break down where we see gold going in the future. To help identify what we're doing with all the horizontal and vertical lines, we'll identify the horizontal ones first. The ones on the lower side we call our lop lines. These are lower points or lops. The ones on the upper side are called hips or high points. These are based on the mathematical formula that we've designed that's similar to a zigzag or a pivot points, but this in many cases excuses other points as not being as firm or as secure as being a strength point for price to pivot off of. We use envelopes, which is basically where the Belkiyat River comes from. These pivot off these outside hips or lops and create a channel. If you notice the line going from left to right, this is our 200-day moving average. This trade channel long that we're describing is actually pivoting off of a lop. Price has been riding along this point, and as you can see, it actually bounced off of it. This line is a stationary line that is set at a certain ratio at the moment of the pivot. And of course, we described from the last chart that we had a double bottom support at 1180 on the 28th of July and on the 31st of December 2013. Using support and resistance, our hip lop aging, or how old are these hip lop lines, are important to our mathematical formulas for determining the trade itself. We find that at this point, you can see prices rising. The last time that price was coming close was 75 bars ago, that you could see from the standpoint, 117 bars. And of course, as we go further up, you'll see that the bars are getting more aged. On the good side is that from our support standpoint, the older bars are actually below us. So this is a very a good thing for gold itself to be rising at this moment. We don't see it coming down and testing support anytime at least in the next couple weeks. On a weekly chart, it's easier to see that gold has made a stand at 1180, and there's been a lot of aged lop lines at the bottom side or support lines that don't appear to be able to be crossed at any point in time at this section. One thing to note that we found from a harmonic standpoint, there's an extended period of 250 points traveling from left to right before 2012 until the middle of 2013, and this has also repeated itself from the middle of 2013 into 2014. What this may mean is that gold may rise to the top of this block and bounce off once or twice before ascending further or traveling back down again to be testing out more support. So let's make some kind of a direction on where we think gold may be going for the next couple weeks. What we normally do is start with the side where we believe that gold is not the least likely to travel, and that would be to the support side. One thing that we're noting here is that we have a short-term mark that isn't actually a hip or lop mark. It's traveling off of the trade line. We believe that price could potentially bounce off of this. After about a week or so, this line should disappear and would not be a strong support line. The next line, of course, would be down at the 1180.81 mark, where price has made the double bottom. So at this point, we believe that if gold were to fail, that it would come back and test off the double bottom again and potentially go through it. But we believe this is the least likely at this moment in time. From a resistance standpoint, this is where gold we feel is going to travel next and be tested. It's already passed over the 200-day moving average. I believe the next mark is this line we mentioned in several screens back. There was a resistance line or a support line that was violated several times going back to April of 2013. You can see it was actually tested here, crossed over, and so forth. We believe that this could be where price bounces off once or twice before going to its more serious mark of 1361 or level 2. If price passes that, closes above it, we believe that the next mark that's very realistic in this particular movement, as we saw from the weekly to in that 250-point range, would be the 1434 mark. So if you hope you appreciated this, and stay tuned to BelkyOps.com for more commentary.